Welcome to this explainer. Today, we're diving into something totally fascinating: lunar rhythms and the psychology of market cycles. We're going to use the incredibly simple but powerful nature metaphors of shifting light and ocean tides to really unpack the connection between market volatility and human psychology. And to make this super concrete, we're going to follow the chronological success story of a hypothetical novice trader. Let's call him Alex. Now, Alex started out losing sleep, and let's be real, a lot of capital, by falling victim to extreme emotions. But he eventually learned to decode these hidden rhythms to find lasting success.
Okay, let's just run through our agenda real quick. First up, the market's hidden metaphor. Then mapping the moon phases. After that, the anatomy of a cycle, followed by the trap of confirmation bias, and we'll wrap up with retail emotion versus pro logic.
Let's jump right into Section 1, the market's hidden metaphor, psychology over logic.
To kick things off, we really have to acknowledge a fundamental truth, one that our novice trader, Alex, learned the hard way. Financial markets, they are not strictly rational machines. I mean, not even close. Market speculation is heavily driven by crowd psychology and deeply held belief systems. This kind of chaos causes traders to desperately search for patterns everywhere they look, including seasonal or even lunar theories. In fact, historically, these belief systems actually shaped a lot of modern technical trading theories. Before we had high-frequency algorithms and instant data, humans looked up to the stars, the seasons, and the skies to make sense of the unknown. And why? Because crowd psychology dictates market movement just as much as cold, hard facts. If you were a beginner, just like Alex was, think of market volatility as a literal force of nature. It's like a sudden storm or a massive shifting ocean tide. During uncertain conditions, our emotional decision-making intensifies, and the market truly feels, well, energetic. You can literally feel the panic or the excitement vibrating through the charts. And it's this exact energy that makes inexperienced traders feel completely overwhelmed and so vulnerable to making emotional mistakes.
All right, let's move to Section 2, mapping the moon phases, light and emotion.
Think about the new moon for a second. It's completely pitch black, right? This dark phase perfectly symbolizes hidden information, extreme hesitation, and just total caution among traders. When the market goes dark like this, you see prime examples of pure fear. Traders hesitate to buy the dip because the future looks entirely black. They start hoarding cash, they panic sell at the absolute literal bottom, and they just become paralyzed by uncertainty. The new moon represents a phase where everything is quiet, cautious, and frankly afraid.
But then, notice the brilliant escalation here. Contrast that darkness with the waxing phase, the brightening moon. This perfectly mirrors growing market momentum. Optimism starts growing, confidence increases, momentum trading kicks in, and you get serious bullish participation. It feels great, but then it explodes into the full moon. This represents absolute emotional extremes. We're talking panic buying, intense FOMO rallies, and completely euphoric tops. Historically, this is the exact moment our trader Alex used to buy in, completely blinded by the bright light of market euphoria.
But nature always demands balance. As the moon wanes, so does the trend, revealing some absolutely crucial signs of peak market exhaustion. The brilliant light fades into declining enthusiasm. Smart traders start becoming highly defensive. They reduce their risk profiles, and most importantly, they lock in those profits after a strong trend. Recognizing this waning phase was actually the major turning point for Alex. Instead of holding on desperately, he finally learned to step back and preserve his capital.
Moving to Section 3, the anatomy of a cycle, reoccurring emotions.
Moon phases repeat predictably, right? Well, just like the moon, there are exact sequential steps of human emotion that define literally every major market cycle. Step 1 is greed. That builds up to step 2, euphoria, that full moon feeling we just talked about. But then the light fades, bringing step 3, fear, and then step 4, the total despair of the new moon. But here's the kicker. The cycle never ever ends there. The absolutely most important step is step 5, recovery. A new cycle always begins. And understanding this specific sequence is what finally stopped Alex from panicking during the despair phase and instead got him preparing for the inevitable recovery. This is exactly why the cycle matters to you. It's a powerful visual metaphor representing the endless waves of market action: accumulation, expansion, climax, contraction, and finally the reset. Markets just breathe in and they breathe out.
If you can align your mindset with this natural rhythm, the daily volatility stops feeling like a terrifying, chaotic storm and actually starts looking like a predictable, navigable tide.
Let's hit section 4, the trap of confirmation bias, seeing what you believe. So, understanding the cognitive biases that influence a trader during these transitions begs an absolutely huge question. If lunar trading isn't hard, proven science, why do so many speculators see the pattern working literally everywhere they look? I mean, why did the early version of Alex swear up and down that the full moon was magically controlling his charts? It comes down to how our brains process market data when we desperately want to believe in a mystical pattern to save us from all that uncertainty.
The answer? Confirmation bias. It is a deeply dangerous psychological trap. It causes lunar traders to only notice and remember the massive rallies that perfectly aligned with a full moon, while entirely and very conveniently ignoring the dozens of times the theory completely failed. They just totally ignore the contradictions. Alex had to unlearn this bias. He had to realize that the moon wasn't pulling the market strings. Human psychology was just repeating its own internal cycles, and his brain was selectively connecting dots that weren't actually there. Which brings us to our final section, Section 5, Retail Emotion versus Pro-Logic, Resolving the Conflict.
Here is your ultimate takeaway. Let's look at the stark contrast between retail emotional bias and institutional data logic. Retail traders are heavily influenced by mood, the daily news cycle, social media sentiment, and symbolic patterns like lunar phases. They are highly vulnerable to emotional manipulation. But on the flip side, institutional professionals, they are focused strictly on data and rigid risk management. Professional advice for navigating market cycles literally always comes down to maintaining strict discipline. Alex's success story was finalized the day he stopped trading the literal moon in the sky and started trading the hard data, using the moon only as a mental reminder to check his own emotional state.
And that brings us to our final thought. Moon cycles symbolize market rhythm more than science. Even without hard scientific proof of celestial forces moving money, the metaphor itself is incredibly powerful. So I'll leave you with this. Does understanding this lunar metaphor finally give you the self-awareness to step back, recognize the shifting tides of greed and fear, and master your own market emotions? Take a hard look at where we are in this cycle right now, and ask yourself, are you trading based on the data, or are you just howling at the moon? Thanks for joining me in this explainer.